Hey guys, welcome to Trading the Charts. My name is Rex and this is Tesla Weekly Analysis number 42 for week ending July 24, 2021. On Monday, Tesla was up 0.3%, closing at 646.22. It's starting to get a bit concerning as Tesla actually broke below the key support level of the bottom of the wedge and the 200-day moving average, dropping it to as low as 621 at its intraday lows, before bouncing back and closing just above these support levels at 646. So for now, it will be a false breakdown. However, it is important to note that this drop was most likely due to the sell-off in the overall market, but it is disappointing to see that it was unable to rally on the news of FSD subscription going live over the weekend. But relative to the overall market, Tesla did hold up quite surprisingly well. It is currently hanging onto a thread of the yellow uptrend line, so we will need to watch it closely the rest of the week going into earnings next Monday to see if this support level will hold. On Tuesday, Tesla was up 2.2%, closing at 660.50. It found support of both the 200-day moving average and the bottom of the wedge, bouncing off of 640 at its intraday lows. As I mentioned, if it can hold above the support level, I do see Tesla breaking out to the upside in the near term, with resistance of the top of the wedge, which currently lies at around 675. I am anticipating Tesla to break out of the wedge once earnings are released next week. Of course, breaking above 675 would be the first step in the bullish breakout, whereas the key level to watch for is a break above 700 resistance. This 700 level is the top of the consolidation zone, and also if we look at the monthly chart, this is where the bottom of the red uptrend channel falls at. So it would be two big indications that this bull move is for real if it can break out above that 700 resistance. On Wednesday, Tesla was down 0.8%, closing at 655.29. It remains trading within the wedge shown here in yellow. It is also still holding above support of the 200-day moving average, which is a good sign. Tesla continues to trade within the consolidation zone between 550 and 700 as well. As I mentioned before, I don't anticipate Tesla breaking out of this until possibly when earnings is announced on Monday. Another bullish thing to note is that Tesla has broken out of the orange downtrend line shown here, which dates back to January. It has already retested the top of the downtrend line and held above successfully. In technical analysis, it is extremely common that after a breakout of a trend line, it will come back down to retest the trend line, and if it is able to hold as support, it usually means the stock is ready to run higher. This breakout is signaling Tesla's potential reversal to the upside. On Thursday, Tesla was down 0.9%, closing at 649.26. It retested key support of the 200-day moving average and the bottom of the wedge at its intraday lows, hitting 644. It appears Tesla will likely remain trading within this wedge going into earnings next Monday, before breaking out or breaking down. It is more than likely that Tesla will have another record quarter, but the reaction to the earnings will be a toss-up. Tesla has not had a large move on earnings for the last 2 quarters after they reported record numbers, which, as I mentioned, leads me to believe the current price does not reflect how well Tesla's business is doing. But as the famous quote from John Maynard Keynes goes, the markets can remain irrational longer than you can remain solvent. On Friday, Tesla was down 0.9%, closing at 643.38. Tesla had a false breakdown below the support level of both the 200-day moving average and the bottom of the wedge, before bouncing back and closing right near these supports. Bears tried to get Tesla to sell off to the 50-day moving average, which currently lies at around 629, but failed to do so as bulls bought the dip going into earnings next Monday. To the bull side, we have the first key resistance of the top of the wedge at around 672. If Tesla can break out of the wedge, we could see it quickly retest the top of the consolidation zone that it has been trading within at 700. A break above 700 would be a key level psychologically to break out of. If it can hold above 700, I can see Tesla easily making its way to the bottom of the green uptrend channel at around 750. To the downside, we have support of both the 200-day moving average and the bottom of the wedge at around 642. The outlook would favor the bears if it broke below this level. The next key support would come in at the 50-day moving average at around 629. So those are my price predictions for next week. Bull case, we have resistance at 672. A break above that and the next resistance level to follow comes in at 700. Finally, a breakout above 700 and we could easily see Tesla run to as high as 750 before hitting significant resistance. Bear case, we have support at around 642. A break below that is less probable, but if it does break lower, we will see the next support come in at around 629. Now, on to Tesla news. Sawyer Merritt tweeted some breaking news sourced from Troy Testlake. First, Giga Berlin will start production in December. Tesla's Tilburg factory is being repurposed for Tesla Energy. Also, there is no final decision about where the cells will come from or the initial Model Y production at Giga Berlin. Tesla is considering building 4680 packs in Texas and shipping them to Berlin until Berlin starts its own cell and pack production and the production rate is high. Giga Texas is way ahead of Giga Berlin. Tesla is dealing with lawsuits in Germany by legacy automakers related to employees switching to Tesla. The source said they do everything to delay Berlin. Finally, Tesla is in talks with Mercedes, BMW, Volkswagen, and Opel about sharing superchargers in Europe. They tested a Volkswagen e-Golf and it supercharged to 100% in 15 minutes. FSD subscription is finally live. Pricing is as follows. It costs $199 per month for basic FSD and $99 per month for enhanced FSD. Tesla's semi-electric truck is finally about to go into production. While there are already a few electric trucks on the road, none of them have the specs enabling longer range hauling in a Class 8 semi-truck like the Tesla Semi is promising. When launching Tesla Semi in 2017, the automaker said that the electric truck's production versions, a Class 8 truck with an 80,000-pound capacity, will have 300-mile and 500-mile range options for $150,000 and $180,000 respectively. It would also have the lowest cost of operation of any semi-truck, making it extremely disruptive in an industry where every cent counts. In March, it was reported that Tesla was building a production line for the Tesla Semi at a new building near Gigafactory, Nevada, to produce 5 Tesla semi-electric trucks per week by the end of the year. Now, sources familiar with the matter say that the drive axle production line is ready and the general assembly line is going through its final debugging before starting production. It is one of the last steps before starting production of the all-electric truck. Ray for Tesla tweeted China EV sales in the first half of 2021. The top 2 spots are held by Made in China Model 3 and Made in China Model Y, with 85,194 units for the Model 3 and 46,570 units for Model Y. Compare that with the 10th spot held by the Audi e-tron with only 1,475 units. At the 3rd spot is the Xpeng P7 with only 19,366 units sold. Another tweet from Ray for Tesla says, informed by a source that new orders for Made in China Model Y standard range rear-wheel drive are estimated to be delivered in early October, sold out for Q3. Tesla China has amassed almost 70,000 pre-orders for this variant. Heard people on the sidelines or even those debating EV options are jumping in, sold like hotcakes. Tesla is going on a sales force hiring spree as demand ramps up in the US. Tesla is going on a sales force hiring spree as demand is expected to ramp up in the US. However, the automaker is focusing on part-time positions to cut costs. Sources say that Tesla is embarking on a new hiring spree for sales staff in North America. The hiring spree is starting to be reflected in Tesla's job listings, with now over 250 new sales positions listed in North America, many added recently. More job listings are expected to be added in the coming weeks. The positions are mostly for Tesla Advisor, Gallery Advisor, and other sales positions. The new hiring spree comes as demand for electric vehicles is ramping up in the US, and Tesla sales, in particular, are expected to boom with a reform of electric vehicle incentives. Tesla buyers haven't had access to the $7,500 federal tax credit for electric vehicles for years now. That's due to a limit of 200,000 deliveries of electric vehicles per manufacturer in the US, which Tesla was the first to reach. It disadvantages automakers who were early in delivering electric vehicles in volumes, but there's currently an effort to reform the EV incentive program and remove the cap of 200,000 electric vehicles. The latest proposal would increase the incentive to up to $12,500, and it would stay in place until electric cars reach a 50% market share of new passenger car sales in the US. While it might not be the final form of the new incentive, a version of it is expected to be adopted later this year. With a reform to the incentive program, Tesla's sales are anticipated to boom in the US, and now the automaker is preparing for it by bolstering its sales force. FSD will have powerful impact on Tesla profits. The math around the potential of FSD is hard to believe. We believe over the next decade, booked operating profit from FSD upfront and subscriptions will increase from $600 million in 2021 to $102 billion in 2032. This implies today that 20% of annual buyers purchase FSD upfront and 3% of the remaining eligible vehicles subscribe. As features are added over the next 5 years, we believe those numbers will increase to 31% and 15% respectively, climbing to 45% and 34% in 10 years. That means in 2031, about 80% of Teslas on the road will have FSD. As mentioned, looking past the decade, we expect full autonomy will be a required feature to sell cars globally. In terms of operating profit, we're modeling for operating margin to increase from 42% this year to 64% in a decade. What does this mean for Tesla valuation? Ultimately, it's up to Tesla investors to decide what multiple to assign to the company's FSD profits. That said, there is room for earnings expansion. Assuming our estimates are too optimistic and the company does a third of the FSD profits in 10 years that we're predicating, applying a 25x multiple on those profits suggests FSD alone is worth $850 billion in a decade, compared to the company's current market cap of $620 billion. Keep in mind that a portion of Tesla's current valuation is already pricing in some FSD success. Gene Munster tweeted a follow-up to his research. He tweeted, "Doing more work on FSD's potential on Tesla's operating profit. Bottom line, over the next decade, it's more powerful than what I had originally realized. In the end, all cars will be fully autonomous and the FSD profitability question will morph into a Tesla profitability topic." In regards to Tesla's Supercharger network opening up to others, Goldman Sachs crunched the numbers and estimated that Tesla could make more than $25 billion in annual revenue by opening up its charging network to other electric cars. And by the way, if you guys want to support the channel and get a free stock worth up to $221.50, be sure to use my referral link in the description below to sign up for Robinhood. Thanks for watching, guys. Please hit that thumbs up if you enjoyed the video and subscribe for more content.